Hey, it's Danielle from Black Business Boom and Black Owned Nashville, and I'm here with my bankers. I'm super excited to have our industry expert bankers, Amelia Watts and Harry Allen from Studio Bank with me today. The Studio Bank team, I can't say enough about my experience in banking with Studio Bank. But not only that, they are industry experts and they come to us to educate this community about all things banking. And we know that the Black community has had some interesting relationships when it comes to banking. So I think it's really important for us to be educated about banking and especially as business owners. So today we're going to be talking about, as business owners, how you can get prepared to go out there and get some funding for your business. We know that our businesses are undercapitalized in many cases, but I will say sometimes we aren't doing the things we need to do on our end to prepare to go out and build a relationship with the bank to be able to get the capital we need. So I'm going to shut up now. Again, I have Amelia Watts and Harry Allen. They are the experts in banking, and I'm going to let them take it away and give you guys some tips on getting the business funding that you need to be able to start, grow, or scale your business. Take it away, guys.
Well, thank you so much again, Danielle. We're excited to be here and we're excited to talk with your audience. Obviously, we know these are very important topics and we want to make sure that our community is aware and prepared for, going ahead and applying for that loan that you're looking for to propel your business. So that's why we're here. Harry and I just kind of want to discuss with you what we call the 5 C's of lending. So several things that are going to be crucial for the process of acquiring a loan for your business. So first thing you want to think about, that first C is character. So you can think of character as credibility or credit. That's how the bank is going to be looking at it. First, we're going to look at, your history, and really what that is your credit history. Do you have a lengthy business credit history, personal credit history? Do you make payments on time? Are your balances, are you overutilizing your credit? Are your balances all to the max? Or do you have a little bit of wiggle room there when you are borrowing money? And then, of course, on-time payments. And, also how much have you, utilized credit in the past? How much have you borrowed? Or is this your first time, borrowing money? So we're looking at your credibility and your credit. And Harry, did you have anything else to add to that?
No, it's interesting that, in banking and underwriting, we talk about the 5 C's and starting with character. Bankers are not moral police. And so usually when we hear the word character, we're thinking about morals and ethics. But to Amelia's point, it's really what type of history have you had with the bank? If you've borrowed money, did you pay it back? If you have been in business for a while, what does the market say about how you conduct business? And so we're really assessing our relationship with the bank. So it's not being a moral cop, which is really helpful for me. I don't want to play that role for anybody, but we want to make sure if we lend you the money, we're going to get it back.
Makes sense. That makes sense. Fantastic. That was a great point. And you're definitely right. When you hear character, you're thinking, do they like me? Like, am I a liar? I'm not a liar. But of course your bank doesn't know you like that. But having that relationship with your bank can definitely enhance what they think is your credit, your character, so having someone at the bank on your side to be able to say, I know them, even if things are a little shaky with their credit or they don't have as much credit, if you have that relationship, it can't do anything but help you. It definitely won't harm you. Wonderful. I'll let you guys take it away with point number 2.
Sure. So, point number two is capital. So, we're looking at not only your character, as Harry said, not as moral police, but we also want to look at any sort of capital that you have. And that's going to be, your income. How much money are you making from, your primary and secondary sources of income? We certainly want to see, that there's the ability to pay back anything that you are borrowing. So the income is going to be important. Cash reserves. So do you have money saved up in the event of, something catastrophic happening, such as, a global pandemic, which we've all experienced in the last year or more. So that capital is going to be very important for the bank to assess, the risk in, lending money to you. So in addition to income and cash reserves, we can look at other things such as equity in homes that you maybe own. That could potentially be a secondary source of income, or if you own rental properties and you're receiving rental income, that could potentially be another source of capital that we would consider when considering a loan application. Harry, any other?
Yeah, no, I think you hit the nail on the head. Capital, if you're looking at a balance sheet for a business, it's that equity section or net worth. And so how leveraged are you as an individual or a business? And is there room, is there margin? To Amelia's point, if the unforeseen happens, do you have some wiggle room, equity, capital built up? The other point is, banks, we're in the risk management business, but we want to share that risk with the business owner. And so sometimes capital can also be referred to as the down payment. If you're borrowing for a piece of property, how much skin in the game are you sharing? And typically it's 15 to 20% on property, but also if you're borrowing for equipment or what have you, we are very rarely lending 100% of that cost. We want the business owner to bring something to the table as well in terms of down payment.
I love that. So if we were looking to get an equipment loan of some sort, or let's just say equipment, what percentage should we maybe be thinking about when we're thinking about what we want to bring to the table?
Yeah, so anything is helpful, right? If it's new equipment, we can get more aggressive, so it can get close to 100%. But if you have 5% to put down, that's helpful. If it's used equipment, usually 10 to 15% is really strong. And then on property, we're looking at 15 to 20% down.
Okay. And are you, in that case, are you putting a lien on the property or on the equipment
That's another C. We're getting there.
Okay,
Yeah.
All right, you all give us the next C.
Oh man. Well, Amelia, do you want me to go on and talk about collateral? Because Danielle, that's what you're speaking to. So yes, a lot of folks either forget, it's hard to remember, or just don't know that, the basic business model of a bank is that we are honored with deposits from the community, and we take that money in those checking accounts and lend it to folks who need to borrow money. So it's not our money that we are investing in your business, it's our depositors' money. And so because of that, we have to be 99.9% certain that if we give Danielle's money to Amelia, Amelia is going to pay it back. And so having a second source of repayment, that collateral, that lien on that property gives us, some certainty that if you're not able to pay the loan back, at least we can liquidate the asset, the piece of equipment, we can sell the property and make our depositors whole. And so that's why it's critical, to underwrite at least two sources of repayment.
I like it. So it does look better when you do have some sort of collateral to bring to the table. Because I think, you may not have the cash, but again, that does give you some skin in the game because nobody wants their stuff taken. Like, no one wants you to come and repossess their truck, their forklift, Like, I know
No,
nobody wants that to happen.
yeah, I don't know if you remember, but even going to skating when I was young, you'd leave an ID or one of your shoes if you're going to borrow the skates, so that
Yeah.
there's some skin in the game. For sure.
I love it. Fantastic. Was there anything you wanted to add, Amelia?
I actually did want to add, kind of piggybacking off of Harry's point of, leaving that ID to get those skates. You certainly wouldn't want to lend someone money if you didn't know a little bit about their character, if they have money or source of income to repay you. And also, something that you could potentially come collect if that person, just goes missing. Mm-hmm. So if you think about it that way, it's, I think, a little bit easier to understand and digest. If you think about it on a kind of a personal level versus it can be a little intimidating coming to the bank and hearing these terms, lien on my property, things like that. But if you think about it that way, it's a little easier to digest.
I absolutely agree. I think, personally, we probably have all had someone come to us and ask for a little loan. And some folks, you're like, I know I'm not getting that back. Like I have people in my family, I've lent money and I fully expect that it's a gift, like I know I'm not getting it back. But then others, I'm like, I can expect, I think there's a 99% chance, like you said, that I'm going to get my money back, so I feel more comfortable with lending to this person. I think that definitely puts it into perspective, from the consumer or either from the business owner standpoint that, these are people who all they have to go on are these things that you're bringing to the table. Because again, they don't know that you've borrowed, from your mother $50,000 and you've paid her back every time. Like, they don't know that. That's not documented, so I think it definitely makes sense, but many of us just don't know all of these components that go into it, and we think it's just the credit, and that's it. So, all right, fantastic. What's our next C?
So, Harry, would you like to take our next C?
I didn't know who was that. Yeah.
Capacity may be a good one for you to go into, Harry.
Yeah, sure. So happy to. So Amelia talked about capital. We've talked about collateral. Capacity is really the primary source of repayment. So it's how much cash flow is being spun out of the business to make the monthly payment. Capital's reserved, we want to show net worth for those unforeseen circumstances to see how strong the business's balance sheet is. Collateral's that secondary source of repayment if cash flow is challenged. So really, we start with capacity. We start with cash flow. And as a ratio, we usually calculate what's called a debt service coverage. And so we want to see your earnings before interest, before taxes, before depreciation, covering your debt payments at a ratio of at least around 1.5 times to 1. And so that's how we determine if there's enough capacity for you to take on this debt. It's really, really important to have a strong banker that, is in relationship with you and doesn't allow you to stretch too thin and is honest about the capacity that they're saying in their underwriting in terms of taking on this a debt and making sure that it's at an appropriate level. I know Amelia and I have seen customers come to us, and unfortunately the debt was structured in a way that made it really challenging out of the gate. And as we went into a period of pandemic and tornado, that just really became even more constrained. So make sure we've got enough cash flow to pay the debt primarily before we look at those secondary sources of repayment.
Now, what documents are we bringing to the table? Are we bringing a statement of cash flows? Are we bringing a balance sheet, income statement?
Yeah.
What do we need to be prepared to show the banker if we're going in and getting ready to allow?
So for capacity, we usually look at 3 years of historical income statements. For capital, we're looking at the balance sheet. So it's both. So, Amelia or I, whenever you request a loan, we'll say, send us your last 3 years of financial statement, balance sheet, and income statement, and then projections. If you foresee the next year or two out, like it's helpful to show that to the bank so that we can not only look at where you've been, but where's the business going. And that can allow us to give some flexibility in the structure of the financing.
And this is why you need a good CPA, bookkeeper, accountant, someone who is on your team, so that when Studio Bank says we need to see these documents, you're not like, oh God, like I don't have those, like. And so it's important that we stay ready so we don't have to get ready when we do need the money. I think it's important that we are always trying to be prepared so that when opportunities come up, or because sometimes you need to go out and get funding because you have an opportunity that you need to take care of, but that invoice it won't be paid for 4 to 6 months or so, but you need to get the job done. And so to be able to go and get this funding in order for you to take advantage of opportunity, you don't want to have to turn down the contract because you didn't have the cash reserves to fulfill it. So
and I missed something on the documentation.
Well, I was going to add one thing. I think it's also crucial to have a great relationship with your banker. In addition to obviously having a CPA, having a bookkeeper. Typically, people will have one or the other, and it's important to have both because you want to make sure that when an opportunity arises, as you mentioned, Danielle, you can go to your banker and send that documentation over and have a call about this opportunity, and we have everything that we need to move quickly. I've definitely had experiences in the past where some people have mentioned that it's taken a long time to have a decision, and sometimes that can be because I asked you for a set of documentation and you sent me everything except 1 or 2 pieces, maybe because you hadn't had that prepared. So it's going to slow down the process if you're not prepared with all the documentation you need. In addition to the financials that Harry mentioned, we're also going to be looking at a personal financial statement. So it's always kind of good to have one of those and just keep it updated so that you've always got it ready when you're ready to go, and not having to, fill it out every time or call your CPA to get it for you.
What goes on a personal financial statement?
Yeah,
That's something I don't think I have. I don't know.
Yeah, it's your blood type, your first lock of hair. No, it's it's really going to just detail everything that you personally own, your assets, your liabilities, anything that potentially we would see on a credit report, and a personal income statement or personal tax return.
Fantastic. Love
it. And it's really helpful, especially with small businesses and sole proprietorships or even LLCs with a few members, because we're lending to the business, but will the business exist if Danielle's not a part of it? And so that personal financial statement gives us visibility through the business to the principal behind the business as well. Yeah.
Love it. Fantastic. This is great information. Amelia, you want to give us that last C? I think this is the last C, right?
Yes, the last C is going to be conditions. So conditions can be really, market conditions, if you want to think about it that way. The interest rate considerations are going to be, dependent on the market. So we all know that the Fed dropped interest rates after the pandemic hit. So a lot of people noticed that their money market accounts that were earning, upwards of 2%, went down to, maybe 0.1% or less. And so that is going to not only affect your, your deposit accounts, your money market account, your checking accounts, but it also affects the interest rate that the bank will offer you. Harry, can you talk a little bit more about, how that could affect lending?
Yeah. So, when we are underwriting, we're making assumptions about what the interest expense will be. So if we're in a rising interest rate environment, even if the current rate, let's say it's 4%, in our underwriting, because of what we're assessing in the market, or where the industry is from a competitive standpoint, we may assume that if it's a 5-year note, maybe we model this at 4.5% and see if the business can still have capacity to make a payment at a larger interest rate because they're likely to rise. So it's assessing kind of where the financial market is, but we also look at the sector you're in. So if you're in the marketing space, what's going on in that sector that may present a challenge to the business. Some of us may be familiar with the term SWOT analysis, but what industry opportunities, threats, and then strengths and weaknesses are presented. So, yeah, that's less about the numbers and more about what's going on in the world or the city or industry that we're in. So
Fantastic. Yes, this was fantastic. Now, I do have a question for the newer business owners because there are a lot of folks that are like, I don't have all that. Like, I'm just getting started. So, any tips or advice you can give someone who's newer in business, only a year or so into their business, haven't had a whole lot of revenue, but may need some capital in order to be able to grow their business? What are their options?
So I'll take this one. Oh, Harry, did you want to take? Okay. It's a great question, Danielle. And obviously Nashville has so many new business owners. So this is great information for them. As we mentioned before, you definitely want to be prepared. Make sure that you have documentation set up. You are treating your business as a true business and not as a side hustle. We need to see financial statements. We need to see tax returns, as we mentioned before. So at very minimum, you want to make sure that your documentation is in order and you have, a tax professional who can advise you on, expenses, things to write off, the way that your taxes should be structured. Those things are going to be important for new business owners starting out so that you're putting your best foot forward when it does come time to, come to the bank and ask your relationship manager for financing.
Yeah. And, honestly, because of how banks are structured, it can be really difficult. These 5 C's of credit are hard if it's a true startup and you have no credit history. And so there is a term that we use called credit enhancement, which, takes the form of maybe there's an additional cosigner who does have the capacity, the collateral, or wherever you're missing, that, at the start may be helpful in terms of bringing on an additional investor or partner who has some of these things as you get started. The other piece is being honest about where you are in starting your business, and maybe debt's not the appropriate funding. Maybe it's equity. And that's a whole different, hopefully you have an equity expert in your circle to give a talk. If not, we can maybe make because that's critical. A lot of people come to the bank as the first stop for capital, and sometimes debt's not the right vehicle because we're not lending our own money, and we require so many of these 5 C's to be in place before you access.
Absolutely. But I think on the flip side, we shouldn't be scared of debt. And I think that a lot of us are like, I don't want any debt. I operated that way where I was like, if we don't have the cash for it, we can't do it, But again, there are going to be times where even just having a line of credit or something available to you to draw on can definitely help you if you're using the money in the right way. So I definitely want us next month to talk a little bit about that, and just to really get folks to understand what is a business line of credit, what is a business loan, what are the different types of business loans, because many times we don't really know what to ask for. We don't know what the options are out there for us. I recently learned it's good to just have a line of credit, it's because there are times where I have $40,000 in invoices out, and so, but business still has to run. So next month, we'll talk a little bit about what some of those options are, but this was amazing. This was extremely helpful. I appreciate you guys so much for joining me and being part of our community. If you are interested in banking with Studio Bank, which I hope that you are, located in downtown Nashville, you can go to studiobank.com to learn more about Studio Bank. And also, if you want to reach out directly, is there a best way for them to reach out to you guys directly if they have any additional questions? You're on mute. There we go.
I'm going to unmute myself. You can go to studiobank.com, or you can call our main line, which is 615-338-9998.
Fantastic. Thank you guys so much. I appreciate you for being part of our community. Thanks for tuning in, everyone. Make sure you get in touch with Studio Bank, studiobank.com. Have a great day.